Okay, folks, welcome to Best Stock Charts for the New Trading Week. Bob Desmond here at the Contrarian Trader. And what we're going to talk about today is the closing price action of the S&P 500 on a weekly time frame. And we'll even take a look at the monthly chart as well to see how we may close by the end of the month and how strong we look going into August. We're also going to take a look at the seasonality of not just the S&P 500, but of our watch stocks being Boeing, Google, or Alphabet. St. Joe, which is a landowner down in Florida, that would be a short. And nat gas play BOIL. That's a leveraged ETF putting you long of natural gas. But before we take a look at these charts and do our technical analysis, I want to talk a little bit about our sponsor, TrendSpider. Folks, TrendSpider is simply an arsenal of trading tools that if you do not have it and you're not using it, you're missing an arrow in your quiver that'll give you the edge over other traders. TrendSpider allows you to discover and improve your edge over other traders using over 50 years worth of market data to test and refine and also improve any strategy you or come across online. You can also automate your grunt work. Folks, you need to put that tedious, time-consuming, and error-prone grunt work like scanning on autopilot. You also need to speed up your process. We're all very, very busy. And the way you speed up your process with TrendSpider is by using their fully integrated tools all on one trading platform. Folks, you can even integrate TrendSpider now with your brokerage platform. So take advantage, head on over there, use the link below. If you sign up today, they only have 1 day left on this special offer. Save up to 60% off when you prepay. To be honest with you, I'm not exactly sure how that works. I always thought you prepaid, but hey, they're always coming up with innovative ways of helping the consumer. The customer support staff is excellent, and they're always there to help you with any of your questions. So sign up, take advantage of their 7-day free trial offer, 60% off when you use that link below. And if you don't like the terms of the prepay, again, I'm not exactly sure how that works. You could always use my 35% discount code so that you get a discount as well. Use discount code CON35, again, CON35. I believe in it so much, I give it away free to our silver and gold level members, to the Contrarian Trader. Also, a link below. Let's get to the charts. Okay, S&P 500 weekly view. You know, Thursday's price action turned me bearish. I fully expected to see a follow through to the downside. Folks, it didn't happen. And when the market doesn't do what you expect it to do, in this case, it was very bullish on Friday, that means that you have an underlying bid in the market and that we can still head up. Now, we closed out the week just off the highs of the week. We do have a bit of resistance immediately above, and let's call it 460, as noted by this volume shelf. Volume on the week was very good. Now to take a quick look at a monthly chart. Folks, it looks as though we're going higher. We're poised to close just off the highs of the month. By the end of business on Monday, we could be at the highs of the month. Yes, the market is expensive. Yes, technically, many stocks out there are very extended, in particular the triple Q names. Have earnings been stellar? No, not at all. Are interest rates moving up higher? Possibly. But all that doesn't matter. What matters is the price and volume action. And the price action is very strong on the month. Again, we're poised to close near the highs of the month. Volume, not great, but okay. Momentum, as measured by the stochastics, very strong. Now, in terms of seasonality, this is monthly seasonality going back. Let's go back. We can go back about 50 years on this. But let's just go back, let's say, to 2000. You can see here that the month of July is a good month. August as well. September, one of the more weaker months, but we're not there yet. It looks as though August is setting up to be a good month. So at current, while I want to be bearish on the market because we have a ton of reasons to be bearish, the path of least resistance remains higher on the S&P 500. Now let's move on to talk about Google. Now Google broke out 3 weeks ago. It pulled back, did a consolidation, and last week we got a continuation breakout on Alphabet, and it was on volume. Are the stochastics pretty long in the tooth here? Meaning, is momentum extended? Yes, indeed. But right now the market is telling us the path of least resistance remains higher for Google. Is it overbought on a daily time frame? Yes, I'll go over that with members along with all the other charts we just went over on a more granular basis, meaning daily chart, weekly chart, intraday charts, talking about entry points, stop loss points, as well as price targets. We'll also be talking about the closing price action of the major averages on the week and on the day last week, as well as many sectors to determine what sectors look best, which ones do we want to avoid. In essence, we're talking about strategy for the new trading week. So we go into the week completely prepared for whatever the market has to hand us. So please take advantage of our 14-day free trial offer, link below. And you also get TrendSpider free with a silver and gold level membership. Back to Google, or I should say Alphabet. We're going to have a little bit of resistance up here at about 144.50 per share. So a bit of a watch out for Alphabet. Moving on to the next chart, which is Joe. For this chart here, we need to talk about the daily chart. And the reason is that both on a daily chart and on a weekly chart, we are extended above the third standard deviation Bollinger Band in red, or I should say on a daily chart, we were beyond that point, but we have since pulled back a little bit. I think there's a little bit more downside to be had here. Do I think that St. Joe is going to crash? No, I don't think that at all. I think that it's just going to pull back to a support level. We'll talk about that with members on the week ahead commentary. At that point in time, we'll cover our short. And that short could look like a credit spread, meaning selling an out-of-the-money covered call, protecting that position by buying a further out-of-the-money call so that we turn a undefined risk into a defined risk trade. And as the shares back, those options decrease in value, and then we take the trade off the table and we pocket the difference. Am I enthusiastic about shorting the shares outright? Not really. We want to focus on our risk with these trades, so we do use a lot of options strategies. Now, the next chart up is BOIL. This is, again, a leveraged ETF putting you long of natural gas. Highly volatile. If you're risk adverse, which is fine, use UNG. Same chart, same setup. Now you can see here that on a weekly chart, we were in a long-term downtrend. That downtrend, I think, is probably done vis-a-vis the fact that you are seeing a higher low get put in. We have also broken out on BOIL 2 weeks ago above resistance. Last week, we did a pullback and a retest of the breakout point. And once we break through this pivot point, which marks the prior high at 76.75, these shares are going measurably higher. So we're bullish on natural gas. Now, we already have a position here on nat gas where we have sold puts and we've also sold some calls. We do not own the shares. That is what you call a strangle, which is an option strategy. Now, if we get a new weekly higher high, I'll be rolling up those puts and potentially buying the shares as well, making us aggressively bullish on the shares of BOIL. However, we have a hedge by using the covered calls. The next chart up, Boeing. Folks, we had a massive breakout on Boeing last week. This is probably my favorite chart. We broke out of a very sound long-term base. And as I always like to say, the greater the consolidation, the greater the validation of any breakout, meaning the longer the consolidation, the greater the probability that the breakout is going to be successful. And last week, the market spoke loudly as measured by volume. This is institutional accumulation. This is not mom and pop buying 100 shares of Boeing. These are institutional buyers. And this is post-earnings. The street liked what it heard. So it looks as though we are going higher. Folks, we're going to be sending out alerts on all these trades. Members, we're going to be talking about these charts in greater detail. Again, talking about the daily charts, weekly charts, monthly charts, and intraday charts to come up with a strategy of how we plan on trading these going into the new trading week. Now, a couple of these are overbought intraday and on a daily time frame. We're going to need to see a pullback, but by midweek, we're probably going to have a position on a couple of these names. So stay tuned for our daily market wraps where we talk about the positions, how are they developing? Do we want to add? Do we want to sell? If you're not currently a member, that's fine. You're not ready, great. But please join us on our live streams, 6 p.m. Eastern Standard Time, every Sunday night and Thursday night. Click that notification bell and get notified of when we go live. It's a great show. We do stock chart requests from the audience. Please leave a comment below if you agree with me on these charts or if you have a different take on my analysis. Hopefully, I'll see you tomorrow night, Sunday Night Futures Live, again at 6 p.m. Eastern Standard Time. Till then, have an awesome weekend and be well.